When the news cycle is dominated by war, inflation, or political chaos, and the markets begin to tumble, investors often instinctively flee towards safe haven assets. Think of these assets as the financial world's storm shelter. This is the place that people park their money when nearly everything else feels too risky. In times of panic, investors want safety and they want predictability, and so they move their money out of volatile stocks and into places of refuge. This is why you often see the prices of safe haven assets rise right as the broader market is in panic mode. Some classic examples of safe havens. So firstly, government bonds. Historically, assets like U.S. Treasury bonds are seen as reliable and backed by stable governments. Another example of a safe haven asset would be currencies. So strong, stable currencies such as the US dollar, the Swiss franc, and the Japanese yen have also acted as temporary stores of value. And the last asset I would mention is gold. So this is the classic example. It's been valued for thousands of years. It doesn't depend on a company's profits, and it tends to hold its value when confidence in the financial system falters. The core concept for gold remains the same today, and recent market dynamics have put gold and precious metals in the spotlight. So gold has recently garnered significant attention, surging past the $4,000 per ounce mark and logging an exceptional 50% annual gain. And that was a performance that's outpaced even popular asset classes like Bitcoin and the S&P 500. Silver has also seen a historic run. It's climbed to a record of $51 an ounce, so that's a 70% rise. That surpasses its previous high, which it hit in 1980. Silver often benefits from a halo effect from gold, and it attracts investors seeking a real physical alternative to the dollar. Silver has a dual role, so it is, of course, a store of value, as we just discussed, but it is also an industrial metal, and that means its price is also often boosted by anticipated deficits of physical supply. However, be mindful that silver is typically more volatile, and while it can often outpace gold's gains on the way up, it also tends to fall faster and harder on the way down.